1, 2.
Phone on silent.
Hello, everyone. Thank you for joining. We'll give people another minute or two to join before we start. Hello, everyone. My name is Moshe Nave, and I'm an SAP Community Advocate. Welcome to today's SAP Community Call on how sustainability fits into your supplier management and supplier risk strategy. I would like to hand it over to Kristen. Kristen, please take it away.
Thanks, Moshe. Hey, everybody, this is Kristen Hanel. I am the Solution Manager for Sustainability for Procurement and External Workforce at SAP. I am joined today by Matt Montgomery and Kari Budry. And I think, people would probably love to hear you introduce yourself. So Kari, why don't you get started?
Sure. Thanks, Kristen. So I am a Solution Manager for External Workforce and Services Procurement here at SAP. I have 20 some years, I'll just say some to date myself, experience in the industry within total talent solutions and external workforce. And I'm excited to be here today.
Thanks. Matt?
Yeah, Matt Montgomery. I'm a solution manager responsible for our supplier management and third-party risk solutions, and have been doing this in this role for about a year, but then prior spent about 7 years in pre-sales talking to hundreds of customers around the world, just on how they approach this, what their challenges are, and what's best in class. And going back, also not wanting to date myself more than my gray hair does, I used to have responsibility for global operations and third-party risk management at Lexmark International a while back. So no, happy to be here as well.
Thanks. So I want to encourage everybody as we go through to put questions in the chat. We are going to save time at the end for Q&A, so we'll go through some of those. And then the other thing we need to do is come to our disclaimer that says...
and we cannot see the slides. So
you cannot see the slides. That's really good for me to know. Hold on one second. And... all the prep in the world, I tell you what. Okay, can you see the slides now?
We can, yeah.
Perfect, thank you for saying that. So this is our standard legal slide that basically says the future is fluid. Our statements today are the best that we know right now. So let's get started. And Matt, I believe you are going to kick us off with the agenda.
Yeah, so we wanted to structure the conversation today, and we'll be talking sort of amongst ourselves, and again, I encourage you to add questions that you might have to the chat, but we wanted to go through just what is that supplier management process and navigating it, because it isn't the same for everyone. Different industries, different companies, different regions tend to approach this in different ways of onboarding a supplier, managing that supplier relationship, qualifying, encouraging use of that supplier all the way through to the end of the process where we would start offboarding that supplier. So we'll talk about what we do there and how we make sure that sustainability activity and risk information, diversity information, all of that is asked at the right time and maintained successfully throughout the process. And then we're going to get into a little bit more specifics of where there are these moments of making sure that diversity is impactful for you in the organization. So as you look at managing suppliers, as you look at encouraging different companies that you want to promote for whether they're minority owned or veteran owned or whatever that is throughout the process, to make sure that it's not just that you onboard them, but they actually get the use and the attention that they deserve. And then we'll go into, Kari will lead us a little bit with services and external workforce suppliers and the different nuances and capabilities in that space. And then we'll wrap up with things around specifically diving much deeper into supplier risk management and sustainability and how we monitor and make sure that what might have been a good actor at one point doesn't suddenly become a bad actor, and walking through that process.
Fantastic, thanks. I think this next slide is yours as well.
Yeah, so the big thing that as we work with many different companies and we look at what they're doing and we look at sort of what is best in class and what does it take to onboard a supplier and how long does it take, and that's a metric that we look at for success. But what we really find is that first bullet, the not one size fits all, and what tends to happen is that all of the questions or all of the onboarding or all of the due diligence we tend to do right at that first moment when we engage with a supplier. And what I would suggest and what we observe from best in class companies is that instead they look at what is that supplier doing and what's the depth of that relationship with the supplier. Because if we overwhelm every supplier with all of the questions, they may not be relevant. It may not be relevant for that time in the relationship. So we want to really set that up to make sure that we're doing this successfully. So some examples of that might be that if I am just going to pay an invoice, the kind of data that I need to collect or understand from that supplier is different than if I'm going to go build a critical relationship with them. If I'm just considering that supplier for a sourcing event and I haven't decided yet if they're going to win the business, there's a lot of information that I don't need to ask them at that point. But if I could ask them, sustainability questions or other things like that would influence the decision to move forward with them, then those are the types of things that I do need to ask in that process. So this becomes much more of an exercise than of us making sure that we're not asking too much in the beginning that is unnecessary and it slows down the process because all of the approvers then are looking at it at that beginning moment. It's really suggesting that we understand what that relationship is and we can get it, questions asked at the right time, information that we need to make the right decision at that next point, not everything in the beginning. And then the other questions that sort of come up here are that we'll see people do is that they'll ask these questions. And another thing that kind of slows the process down is that it may not be relevant for the activity that they're going through. So as we look at, if they're a manufacturing supplier, we may want to understand a lot more about their supply chain to make sure that they have good sustainable practices. But if they're a services provider, the questions may be different because they would tend to be more local. We might have more of an understanding of who they are. And Kari will talk a little bit about that later. But that idea then that we're able to make sure that it's relevant not only for the process and the time and what we're going to do with that supplier, but it's relevant for what it is that they're doing. That becomes really important. And by setting these up and managing it conditionally, that's really going to open up the process and make it go a lot more efficiently.
So Matt, I'm wondering, what are you seeing that people are getting right and wrong about this today?
Yeah, I mean, I think that the biggest thing that people are getting right in this process is that they are trying to do it, so that we are trying to ask the questions of, what do you have a sustainability practice, or what is your diversity status, if that's relevant for where you are in the world, or are you, like that information that we're trying to collect, that's a really good thing. But where they're getting it wrong is that, if you've already decided to, for example, pay the invoice and you didn't get the pre-approval, the depth of questions that people still ask in terms of onboarding, just isn't relevant to what you're trying to do. So I would say, let's try to make sure that we push things to where we're setting them up, and it's a strategic decision to work with a supplier. All the traditional things about let's get purchase orders or other pre-approvals done or contracts in place prior to the service being performed, so we're not stuck with these invoices at the end. But when that comes up and we don't have that deeper relationship, let's absolutely streamline that process so that we can really focus on the strategic suppliers and the strategic decisions. And those are the kinds of things that are the big when we look at the procurement adoption, we look at optimization. I mean, taking somebody from a best in class in the leader quadrant for time to onboard, time to manage suppliers, ability to address risk, all of those sorts of things. Though that's what they're doing versus trying to make it one size fits all, and you end up in the lower left quadrant of just taking weeks to onboard suppliers, and everybody's frustrated with the process.
Yeah, that makes sense. You've hit on a couple of key points, but I'm wondering is there anything else when you think about what an efficient process looks like?
Yeah, I think an efficient process says, what is the minimum that I need to know for this next decision? And what are my opportunities then to have, where suppliers might drop off, if you will, as we go through this. So if I'm thinking of taking them through a sourcing event, what are the things that are going to lead into that? What is repeatable? So if they are eligible to compete in another sourcing event when they don't win this one, let's collect enough data there so that we don't have to ask it again, but let's only ask what's relevant for that activity. I don't need to know everything about them when I'm just getting started. And then once I decide that they're interesting enough that I want to move forward with them, they're a finalist, we're still talking, we're still able to get more information from them. So then we can supplement it. But I don't need to ask 100 questions of somebody that I'm not sure really that I'm going to work with.
Yeah, fair. So while Matt takes a drink of whatever water, coffee he's drinking, Kari, how is this different for service suppliers?
Yeah, so, and I'm going to talk about this in a few minutes in depth, but there are so many additional complexities when you're talking about services suppliers or staffing suppliers for your contingent labor, because it's people-based, right? And so, people are complicated, and you've got all these other considerations that you have to take into account, like things like safety and training and fair wages and vetting and those kinds of things. It's much more complex, it's more multifaceted, and it's more subjective. So that makes it a bit more, you have to consider additional factors in that case.
Absolutely.
Yeah, and I think as well as we start to sort of evolve this conversation today, there's a lot of sustainability components I think that we have to consider as well. So I think that takes us to the sort of our next slide here, but the idea of where sustainability factors into those decisions, where it makes the most sense to gather that data to inform that decision is really important.
Yeah, before I flip the slide, I want to add on to what Kari was saying. She mentioned safety and fair wages, which are both sustainability factors when you're talking about external workforce. And there's been some unfortunate news recently about a very large company that got fined by OSHA because they had external workers fall into a tank, and thank goodness they're fine, but sometimes they're not, right? And it was the report showed that it was because those external workers weren't given the proper safety training. So what we think of as being, data information can have real implications for people. And then when we talk about fair wages, it's important to understand what that means around the world, right? Especially if you're a global company. There are even regulations in some countries that say you need to pay fair wages, or you need to at least pay your external workers the same as what you're paying your internal workers. That's not everywhere, but it's important to know that and to make sure that you have the right benchmarking and rate guidance for that. So let's go ahead and move into the next slide, which is incorporating diversity into supplier management. And it's interesting. Sustainability in general means different things to different people. If I'm in Europe and I say sustainability, the person I'm talking to might think of carbon footprint reduction or human rights due diligence regulations. Those are really strong topics in sustainability right now. If I say it in the United States, a lot of people will think more of diversity, right? And yet even the word diversity has its own sub meanings. So if, I'm still in the United States and I were to say diversity I might think of women-owned or minority-owned or veteran-owned or LGBTQ-owned. But if I'm in Canada or Australia, they may be thinking of Aboriginal-owned. So, the first thing is to know, what your company means by diversity. That sounds kind of silly, but it's, when you're thinking through what you're measuring, what you want to track, it's really important to collect the right details at the right time, as Matt said. And really, working with diverse suppliers has a lot of commonality with onboarding your other suppliers. It's just that you have a few extra steps in there. So you may go to other sources to find diverse suppliers. You obviously want to collect certifications if they're available and then validate those. The validation of that can be done in-house, as some companies do, or it can be done by a third party, or what I like to call a trust proxy, right? Somebody who can help you validate across all of those different sources of information. But the real value comes not just by having sustainable suppliers. That's great. That's wonderful. However, what you really want to get to is the utilization of those suppliers and getting to diverse spend. And in order to do that, that means incorporating the information about that diverse supplier throughout your source to pay process, so that you're inviting them to sourcing events, so that you're writing contracts with them, so that you're ultimately sending them business, whether that be in your casual buyers choosing them to buy things from, or whether it's your corporate buyers sending them orders. So being able to make sure that you are incorporating them across that source to pay process turns them into a statistic, like I have this many diverse suppliers, to really being able to get the benefits of having diverse suppliers and diverse spend. Matt, you're on mute if you're saying something.
Yeah, no, talk a little bit about where this this just is hard. It seems to be difficult, and why are we talking about this more than we would just onboarding regular suppliers?
Yeah, that's a good question. I mentioned that there's different things in different regions. There's different regulations in different regions, right? And so in some places there are regulations promoting diversity. In some places there are regulations that say, we really don't want you asking those questions. So as a global company, like with everything else, you need to understand those nuances. Another way that it can get difficult is in some places, like in the US, we have government certifications that are easy to find and look up. However, in other places, it's more reliant on the supplier to self-designate whether they're sustainable or not. And then it's up to the company, or if they're using a third party, to then validate that information. So that can get a little complicated at times. And then finally, there's no single validating body, right, when it comes to all of the different types of diversity. And so finding the right process, if you're going to do it internally, finding the right partner, if you're going to outsource, that is really important.
No, I think that's great information. And I know in my previous life, trying to manage a diverse program, I mean, there were a lot of ways that we would try to approach it, taking it up a level in terms of like category management of where were there opportunities for diverse suppliers. And if I focus just on the US for a moment and where we were trying to drive that program, there was a lot of misunderstanding about what that meant. That meant that we might be getting a lower quality, or we might be getting, something, that they weren't as experienced in, and that turned out just not to be true. So it was just more of being able to find those suppliers for us that was hard. And then once we found them, though, I mean, there was an office supplies vendor that had, warehouses around the country that could absolutely compete with big box stores, right? I mean, or there was a translation services company that was better than our current vendor that we started looking at. I mean, a number of those kinds of opportunities that we just hadn't explored because this was a different way. And we get into these ruts of just working with who we're comfortable and familiar with. And so this does sort of help us push the envelope, I know, in terms of searching for suppliers. But as they come in, I absolutely respect the validation statement you made, Kristen, because it'd be wonderful if there was one global body that said, yes, they absolutely are certified in all the characteristics that they say. That would make things easier, but that's definitely not the case. But Kari, maybe you could talk a little bit too about where this is important from an external workforce perspective.
Yeah, absolutely. That's so from a supplier diversity, I think there you have all the same considerations as you do for your suppliers of goods, right? But there's some additional complexity and considerations when you start thinking about the workers, the consultants, and the contractors that are assigned to projects and that are working within your business. So the diversity consideration or ESG considerations need to be across the suppliers and the workers that they're leveraging to complete their work. So I think it's equally critical from a supplier perspective, but there's that additional layer that you want to consider. And that is very important here.
Yeah, and that actually takes us into our next slide, Kari, that you were going to cover about managing services and external workforce suppliers.
Awesome. So it's true. Everything that you, Matt, and you, Kristen, have talked about thus far absolutely applies to service providers and external workforce suppliers as well. But as I mentioned earlier, there's a lot more complexity with these kinds of suppliers, in no small part because the product being delivered involves human beings. It's easy and super common for organizations to manage these suppliers in the same way that they are managing the suppliers of goods, if they're managing them at all. And it seems super obvious to say it, but people are more complicated than, for example, pencils, right? A pencil can be precisely measured. You can easily and very clearly estimate the quantity required and articulate that. Once you receive your pencils, it's easy to confirm delivery. Either you got them or you didn't. The invoicing is more straightforward. The quality is clearly measurable. And none of this is true for services, or at least not in the same way and not as easily. There's so much more subjectivity in the whole process when you are, so let's say, quantifying the end product, right? When you are engaging with a service provider to deliver on a project, quantifying the outcomes can be complicated. How many people are going to be needed? Do you care how many people are going to be needed? What accesses are they going to need? Nuances like that. And then measurement is incremental, and it can vary across the life of an engagement with a service provider. It can include tracking of project and milestone achievements, SLA performance, change order and budget adherence, and so many other factors. And all this complexity really adds up, and especially when you're dealing with your more business critical functions or strategic initiatives, you can't. Well, you can, but you shouldn't put as much emphasis on the cost of the provider as you do on some of the softer factors. So things like reputation, service quality, creativity, experience, expertise, all of those really need to outweigh cost savings when you're determining who you're going to engage. Hiring the cheapest vendor to deliver a critical strategic project can at times lead to missing the mark on those projects, on the initiatives and strategies that you're trying to execute against. So you really have to take a holistic look across all of those factors when you are trying to identify the right suppliers for your business. And then from a sustainability perspective, going beyond supplier diversity, it's super important not to ignore your external workforce when you're implementing an ESG strategy. Because in so many companies today, and this is increasing globally in every size business, 30 to 50% of all of their workers who are engaged with their business are external. They're contingents, they're contractors, they're consultants. And a lot of companies do not have information about this large and growing population of people in their ecosystem. A lot of times these workers fly under the radar, as Kristen was pointing out in some of these, incidents that we've seen in the news recently. They fly under the radar and they aren't being represented in, D&I reporting, and they're not understood from in a central way. Who's working in your business? Who's working on your brand? Who has access to your systems? And as we've seen in recent news, including Kristen's reference earlier, when you have an incident of exploitation at one of your facilities and it shows up on the evening news and is spread across social media, the fact that that worker came from a staffing supplier does not negate the damage that you receive against your brand and your business. It just doesn't. It's your name that is in that headline. So, given all that, it really makes good business sense to look more closely at services and labor suppliers and to manage them differently with additional rigor beyond what you might be doing with your pencil.
I love the people versus pencil. There's a joke in here about one has an eraser, the other one can't correct their mistakes as easily. But when you talk about sustainability, I think bringing back the point of it's easy. It's sometimes easy, right? It's easier to collect data and to have it stored somewhere than to have it right in front of you when you need it, because that's really what turns it into information. And I would say that's true also, or maybe especially with sustainability, to make sure that you're not just collecting the data, but that you have it in front of you to make decisions and to keep people safe, as you said before. All right, so our next slide is on supplier risk management. Matt, do you want to cover that?
Yeah, and I think as we've talked through a little bit of the process as we've gone into this, risk management is Kari brought up. I mean, it can be really serious, and you talk about where risk can happen from anywhere. But we want to make sure that we're not just evaluating a supplier for one thing. So, as we've gone in and talked to different customers, they may only be looking at the financial health or the financial risk of a customer, and they're missing a lot of these other things that could have just an absolutely massive impact on that company's revenue. As Kari used the example, I mean, the brand impact, can be huge. So what we want to make sure that we're doing is looking at all aspects of risk. So whether it's environmental activity or social activities, or we want to make sure that we're monitoring for there's no forced labor or child labor or other bad practices. That's a factor, as well as regulatory and legal compliance or operational scoring. So we'll look at all of those different factors and make sure that we're monitoring that as we go and that we weight that correctly. And so if there is an incident, we can absolutely react to it as quickly as possible. But even more importantly, if we can get earlier in the process, so as part of understanding our relationship with that supplier, so we can ask questions or perform due diligence at the time of onboarding, but even more importantly, at the time of an engagement. So if there's a new relationship you're building with a supplier, if you're going through, maybe it's a new statement of work, that we can perform due diligence specific to that activity. So we can ask the questions about, working conditions, or we can ask about, relevant activity for that process, so that we can try to proactively understand where there might be a little bit more risk than I as a customer are willing to assume, so we can take the right activity to put in, whether it's additional policies or additional requirements, or to sort of even in a worst case say, okay, let's stop working together, because the difference in terms of what we can accept and what that supplier is able to perform isn't there. So we want to embed those questions, and sustainability is a key part of that at the time of engagement. So that may be years after I've onboarded that supplier. It might be that I've worked with them for a very long time, but due to new regulations or new awareness or new capabilities, we need to really ask those questions and perform that due diligence differently, sort of naturally as part of the onboarding process. The other thing that we have to kind of do, and this one kind of hits near and dear to me, was that we need to make sure that the process of collecting and managing, whether it's sustainability information or other risk information, is not separated from the decision process as you look to award new business or to like issue new orders or whatever that is with that supplier. And I think, when I first did this, we went through a big exercise and we looked at all sorts of different financial factors and operating factors, sustainability factors. We did all sorts of cost analysis of what happens at a global level if oil prices increase or decrease. I mean, we looked at all sorts of things around changing regulations and new laws. I mean, we looked at all of this stuff and came up with a list of suppliers that were critical to us, but weren't in a good state. And it went all the way through our board of directors. But at the end of that process, as we decided on all the actions that we were going to take, we walked out of there feeling pretty good. But then a year later, the same suppliers were still problematic. And it was because we had not gone through the exercise of saying, okay, because the supplier's a problem, we're going to gate this decision. So, things that you could do to say that if the supplier has a higher risk at a certain threshold, and we're going to spend a certain material amount of money with them, maybe the risk team needs to take another look at them because this might be outside the parameters of what we're willing to accept. And that's embedded in your procurement approval process. Or as part of a sourcing activity, there's a little bit of an awareness at the time of adding the supplier or a gate as part of the award process to make sure that that's prevented, or as part of a contract that we can either automatically add protection language into the contract, or even better, we can start to drive different behaviors before the contract is signed. So, by embedding that all together, longer term, you're going to be more successful and significantly reduce risk. But as we've observed, so many customers have a risk team and a risk process, and that is really independent of the supply chain or the sourcing team and in delivering things to the business. And then as we set up that sort of last bullet, for what is our corporate strategy, let's make sure that those decisions are also embedded in that process, and we can really start to show progress against that. So, as general business users, we have a decision more maybe on the pencil side than sometimes on the people side, but we can make decisions on who we're going to work with and show that, all things being equal, here's a more sustainable supplier in that aspect, and let them pick that supplier, and that'll drive corporate behavior in a positive way, much more aggressively than having to dictate to a user that this is who you have to work with because. So, we can really get that momentum. But again, we can embed that process into the source to pay process to also encourage. So, if somebody chooses a supplier and it's not one that's sort of on our good sustainability list of preferred suppliers, we can stop or recommend, or we can sort of course correct that to go in the direction that's aligned with our corporate strategy. And that becomes much more powerful than in terms of execution.
Absolutely. As you're talking about this, I'm thinking about the human rights due diligence regulations that are happening a lot in Europe, but in other countries as well, and how important that is. In fact, it's built into the requirements that there's an ongoing monitoring, right? And you can't just look at risk when you first onboard a supplier. It's something that you have to keep track of and understand both in your tier one and further down your supply chain. So that's super important. I'm curious, Matt, where do you see these programs typically breaking down?
Yeah, I mean, I think everybody has the best intent. They don't intend for these things to happen. It just because we have different organizational silos that the organizations don't tend to collaborate as tightly as they could or should. So where I've seen this happen more successfully is when the corporate risk team, the sustainability team, the purchasing team, the supply chain teams, they're all very much integrated in terms of aligning to a strategy and then agreeing on what, in the simplest sense, an approval flow might be, but as they go to develop their supply base, that they are working together then to make decisions on what the criteria would be, how they go through a decision process, and working together for those. Where it really has failed is when that doesn't happen, and you see the risk team setting an objective, but then you've got thousands of purchasing transactions happening off to the side that may be a little aware of that, but aren't really paying attention. And so there's just so much undesirable process leakage then if those teams aren't really working together.
Undesirable process leakage. I'm going to try to use those words later in my day. Thank you, Matt. All right. Before we head on to Q&A, I just want to remind everybody that there are some blogs on these topics out at the SAP community page. That's at community.sap.com. And so I encourage you to go out there and read them, or if you already read them, you might love them so much that you want to go back and reread them. That's where those live right now. And now I'm going to invite, well, actually, I'm going to stop this, the screen sharing. Can you guys see? Let's see here. Here we go.
Yeah, back to you.
Fantastic. So I would encourage anybody that has questions to put them in the chat. I'm going to, I think I will pick on Matt first, ask him a question. And my question for you, Matt, is how do you see all of this? How do you see supplier onboarding and data management, or even risk? How do you see that extending into the future and changing?
Yeah, I think we're getting better with some of the AI in terms of being able to have more access to more information. So as we start getting into things around, like, I mean, different products that sort of help us enable that process of being able to consume more data or make better recommendations, I see that really coming up. I mean, the problem in the past has been a real data aggregation problem. I mean, there might be sustainability information or certification information or operational data or other things in different places, but being able to pull all that together so that I've got sort of a recommended approach. And I think we will be able to spend a lot less time on individuals having to analyze that data, and it'll just come with sort of trusted recommendations for suppliers that we should work with, or sort of these gotcha moments that need to be called out and addressed. So yeah, I'm really looking forward to making this a lot less of a big data analysis problem and simplifying it for users. That's what I see is coming.
Yeah.
The one for you, Kristen, just because you called me out here, is the one I see is how are you keeping track of some of these regulations and understand the sort of the global questions?
Yeah, it's interesting because I think everybody's asking that question. Because if you're a global company, there's certainly, if you're looking at Europe, you can look to the EU in some cases to see what's coming. I'll give you the example of human rights due diligence. A lot of countries are coming up with their own human rights due diligence regulations. Germany and Norway, for example, came up with some recently, or enacted them recently. But the EU is going to come out with one EU-wide, I believe, sometime in 24 to start in 25 is, I don't know if that's the latest out there, but it was the latest I read. Right. And then in the US, you can see there's some interesting regulations maybe coming from the SEC as it pertains to carbon. And that's something to keep your eye on, because it sounds like next month they'll probably announce something, but it is assumed that that will go through the court process. I think the thing to keep in mind, though, it's easy to get all wrapped up in the minutia, right, of what politician said what, or, you know, what regulation is coming by when. I think the most important thing to keep in mind is that sustainability is driven by stakeholders, right? And those stakeholders include government regulators. That's one key stakeholder that you need to care about. But it's also driven by investors. It's driven by your consumers, right? The people who use your products and services. And it's driven by your employees. So regardless of what regulation comes out, I mean, granted, if a regulation comes out, you should totally follow it. But even if this SEC thing, right, for example, it gets wrapped up in the courts for a while, your stakeholders still care, right? So if you're a consumer products company, then your consumers are saying to you, and this is growing in demand, right, that they want to buy from responsible companies that take care of the environment and people, right? Social and climate are both important. So I would say for companies who are trying to figure it all out, that is, it's important to stay on top of the regulations, but I think just as important is to understand what your other stakeholders are demanding from you when it comes to sustainability. Thanks for your question, Matt.
No, great answer. I probably, I know none of us are attorneys here, but the probably should comply with regulations is probably the
If you like that
advice
legal
of the
advice,
day.
yeah.
Yeah.
I would recommend it. That's, yeah, not an attorney, but I would suggest.
Good
Yeah.
logical call.
There you go. Kari, just kind of in the same vein, what do you see coming kind of in your crystal ball in the future for external workforce and services?
Sure. So it has actually been the case for a while now that pay transparency applies not in North America necessarily, but in some regions of the world. For a while now, there has been a much clearer need for pay transparency between full-time employees and external workers. But we're seeing a lot of interest in that. There's some legislation being proposed, but just in general, from a social responsibility standpoint, we're seeing companies in North America as well now really wanting to understand, you know, pay transparency. How are we paying not just our full-time employees, but is that commensurate with what we are compensating our external workers as well? And, you know, getting a visibility to that and then managing it. That's definitely a trend that we're seeing now as it relates to sustainability. That's a big one. And it's exciting, right? I mean, it's been around for a while elsewhere, and it's nice to see it happening globally.
Yeah, absolutely. Yeah, I see a lot of the so you might want to call them trends, certainly regulations, right, that happen in other parts of the world are certainly driving things that are happening in the United States and elsewhere. I think my first real experience with that was GDPR, when you know, I sit in the United States, but by God, I took a lot of GDPR training. And so a lot of these regulations that are happening in Europe, I think, are going to have a GDPR-ish type of effect. I think if you're right now, if you're a global company, you're checking to make sure you're in compliance in the countries where you operate, but the some regulations will start to affect everyone, even if you're not based there. So it'll be interesting. All right, any last thoughts before we wrap up?
No, thank you. This has been fun. I appreciate the time, everyone.
Yeah, absolutely. And Moshi, I think I'm going to turn it back over to you.
Yes, thanks a lot for a great call. The recording will be available in our YouTube channel, in the SAP Community YouTube channel, and we'll also upload the presentation in the upcoming days. Thank you, everyone, for joining. Bye-bye.
All right, thank you.